We are at Sanjay Parekh is founder and CIO of Sohum Asset Managers. He's with us to take some questions. Sanjay, great to have you with us here. Thank you for your time. Some of the, we always kind of, once in a while, once every 2 or 3 interactions, get a stock idea from you, something new you've done. Why don't we, is there one today, Sanjay?
True, Prashant. So, essentially, a recent addition, we used to own Syrma at one point of time. And then it moved up quite fast. And then we did sell off. But recently, again, we found it quite attractive at reasonable valuation. And so last month, we added that because we clearly realized that the EMS space, certainly will do well. And this had a good amount of consolidation and earnings had moved up. And their valuation was now getting a little reasonable. It's still not that cheap, but for the growth, we were comfortable to enter. That was one entry that we did. Of course, it's a very small weight because these stocks are volatile, so we do keep an eye to average if it goes down. Another one we added was Polycab earlier last month. Again, that space has done well. All of them in that segment has done well. The opportunity is pretty large, and it's a sizable player with a pretty good market share. And there is a clear story of unorganized to organized. And there were some worries about new competition, but I think that's still 3-4 years away. By then, this company would really gain size. And while again, it was not that cheap, but for the growth, we were comfortable. So these were 2 additions that we did.
Syrma SGS and Polycab. You're overweight, Sanjay, telecom. So I presume Bharti in that? That's the only play? Or are you looking at Industars or...
So we had both, and I'll disclose this. We had both Bharti and Indus Tower, but Indus Tower we recently just reduced because we thought it was really getting a little murky in the sense of, Vodafone talking about that if government support doesn't come through, they would want to file a liquidation. So it is getting a little tough. I really still hope that it will not go that way, but we were wanting to be cautious and luckily we were in the money, and so we thought that let's take money off the table and then we will reassess if things get clear on that side. Bharti we still own, we have a neutral weight, we have a partly paid up, so effectively we are neutral weight in Bharti. It's not cheap now, but we like it structurally because it's a very clear play on gaining market share. And it's done exceptionally well. So it's a good core holding for us.
I was just going to ask you, because Bharti has run up so much in the last 5 years. It's gone up from 500 rupees to about 1800, 1900. And considering that you focus so much on value, your PE of your fund is much lower than the PE, the average PE of the Nifty 50. So how does it align, Bharti's valuations versus, even though it's offering growth on the valuation front, how do you think about it?
Yeah, so, our strategy is we love growth, but we don't want to overpay for it. So growth at reasonable price is what we are. Today also, I think our valuation in our markets moved up. So it's more like 14.5 times on 27 for growth rate, much higher than Nifty, and ROE is much higher than Nifty. So Bharti, yes, it's worked very, very well for us. We participate through the main and the partly paid up. In fact, partly paid up, I remember, has almost become 3x because the underlying has gone up 2x, and they're not called out for the 402 rupees, which is yet to be paid. So it's worked well. So one is, you're right, in the near term when you see, they don't look cheap. But now Bharti is into a free cash flow territory. Also, there is a clear case of revenue market share gain. And when you look at this company in terms of EV, EBIT to EV or FCF yield on the core business, then it is not so overwhelming. It is still going, I think, a bit faster. So when you think from a next 3-year angle, you may not get returns for the next 6 months, 9 months, but it's okay. That's the way we are thinking about Bharti, that if we think from the next 2-3 years, the clear runway for growth and appreciation.
All right. Sanjay, just stay with us. I want to ask you about IndusInd Bank. We're getting some statements that are coming in there from Mr. Ashok Hinduja. He's expressing confidence that, in fact, the bank is on the recovery path. And importantly, the last part of that particular press release that he's put out is that though the capital adequacy of the bank is quite healthy, for business growth, should any further equity be required, the promoter entity remains committed to supporting the bank as it's been doing over the last many, many years. So there is, some kind of confidence in case it's required. Promoter entity saying, we are there. He said it before, but I think, reiterating that, I guess the street is taking heart from a couple of those statements that are flashing for you at the bottom of your screen. Sanjay, what is your view on IndusInd Bank? Diversified financials is what you like. Will it make the list?
Yeah, no, so we got hurt. We own a little bit. We did sell on the rise. So let's me admit that it's certainly that we own. So I think there is clearly a mess by the executive management. There is not one mistake. There are a series of mistakes. And of course, whether it's fraud or it's connivance is yet to be proved. But certainly for the fifth largest bank with 4 lakh crore of capital, it's certainly, and as I said, it's not one area. It started with investment book, then it went into microfinance. Then even the classification issues, while it does not have a profit impact. So these are, for the fifth largest bank, it certainly doesn't go well. So to admit first, certainly it's not good. Now, whether it is in the, we've gone through earlier in a lot of banks, whether is it in the price or is it not in the price? I think yesterday's call from the board was quite satisfying in terms of the controls that they have taken from the executive management. While there's a committee which is managing it, and RBI has been very supportive. And we have a 4 lakh crore deposit franchise still not impacted so much. So if you have the right management which will come through, then this franchisee has done a lot of good things as well. The impact on the book value, mind you, after all this is not more than 40-50 rupees. So the book value, this year they made profits, the book value will be around 820 rupees. And next year, conservatively, it could be 880 and then 950. So now, if the ROE trajectory, which is not going to happen to 12% for the next 2 years, but if things on the delta gets better, I think cleanup has happened. Now, if the right management comes through, if they get the right top management, executive management, and if that gives confidence, then I think things can get better. So that's where that's where we are right now, and I think we'll also watch it as it progresses.
So Sanjay, what are you saying? You got hurt, as you're admitting, but what's the call right now? The time to sell, you believe, is over. Is the time to come in there and chip in again coming, or would you wait buy only at, say, lower levels?
So we on the rise, and we transparent, we did sell, but we are owning 1.3%, and we will hold on. I've seen that at times, it's better to pause a bit, wait at times. There could be, it's a very large bank with a market cap, in fact, less than Yes Bank, I suppose. So it's certainly very, very attractive for, if today this were to have an M&A or a merger, it could be lapped up at a significantly higher price. But that's not the way we should think about it. In the near term, it's important that we get a good executive management and they run it efficiently in a better way with better processes. And I think that will instill confidence, but it can be a time-consuming process.
Absolutely. Sanjay, just one last brief question. You have some allocation to very, very small to commodity chemicals. What name is that?
So we have Pondy Chemicals, which is
I see.
it's not chemicals, it's into recycling like Gravita.
Correct. We've spoken about this and it's done very well from the time that you've I think bought the name. Thank you very much, Sanjay. Appreciate you joining us and good luck as always as you run the fund. We'll take a quick commercial break.